Investing in American banks has its own set of pros and cons. Here are some key points to consider.
Stability. Many American banks are considered stable and have a long history of operating successfully. The U.S. banking system is highly regulated and monitored by regulatory authorities such as the Federal Reserve, ensuring a level of stability and security for investors. Diversification. Investing in American banks can provide diversification to your investment portfolio. Banks offer a wide range of financial products and services, allowing you to invest in various sectors of the economy through a single institution. Dividends. Banks often pay regular dividends to their shareholders, which can provide a steady income stream. Dividend payments can be particularly attractive for income-focused investors. Growth potential. Banks can benefit from economic growth and rising interest rates. When the economy is doing well, banks tend to see increased lending activity, which can lead to higher profitability and stock prices.
Now for the cons. Please be advised of these before making your decision.
Regulatory risk. While regulations contribute to stability, they can also create challenges for banks. Regulatory changes can impact the profitability and operations of banks, and complying with new regulations may require significant investments and resources. Interest rate sensitivity. Banks are highly sensitive to interest rate changes. When interest rates rise, borrowing costs increase, which can lead to reduced loan demand and lower profitability. Conversely, when interest rates fall, banks may face challenges in maintaining profit margins. Credit risk. Banks are exposed to credit risk, which refers to the possibility of borrowers defaulting on their loans. Economic downturns or financial crises can lead to increased loan defaults, affecting the profitability and stability of banks. Market volatility. Bank stocks can be subject to market volatility, influenced by various factors such as economic indicators, investor sentiment, and financial market conditions. Fluctuations in the stock market can impact the value of your investment in banks. Reputation risk. Banks operate in a highly scrutinized industry, and negative events such as scandals or regulatory violations can significantly impact their reputation. Reputational damage can lead to loss of customers, increased regulatory scrutiny, and potential legal consequences. It's important to conduct thorough research and consider these pros and cons, along with your own investment goals and risk tolerance, before making any investment decisions. Consulting with a financial advisor is recommended to obtain personalized advice based on your specific circumstances.
J.P. Morgan Chase & Company. J.P. Morgan Chase & Company is one of the largest and oldest banks in the United States. Its origins can be traced back to the early 19th century when it was established as the Manhattan Company. Over the years, the bank grew through various mergers and acquisitions, including the merger with Chase Manhattan Bank in 2000 and the acquisition of Bear Stearns and Washington Mutual during the 2008 financial crisis. J.P. Morgan Chase weathered the crisis relatively well compared to some other major banks and emerged as a dominant player in the industry. It offers a wide range of financial services, including consumer banking, investment banking, asset management, and commercial banking. J.P. Morgan Chase has consistently been one of the most profitable banks in the U.S., with a strong balance sheet and a significant presence both domestically and globally. Bank of America Corporation, commonly known as Bank of America, B of A, has a rich history dating back to the early 20th century. The bank was originally established as Bank of Italy in 1904 by Amedeo Giannini to serve the needs of Italian immigrants in San Francisco. Over time, it expanded through mergers and acquisitions, including the acquisition of Nations Bank in 1998, which led to the creation of the modern Bank of America. The bank offers a wide range of services, including consumer banking, wealth management, investment banking, and corporate banking. Bank of America faced significant challenges during the 2008 financial crisis due to its exposure to subprime mortgages, which led to substantial losses. However, it received government assistance and embarked on a strategy to strengthen its balance sheet and improve its risk management. In recent years, Bank of America has shown improved financial performance and a focus on digital innovation to enhance customer experience. Wells Fargo & Company, established in 1852, has a long and storied financial history in the United States. The bank played a significant role in the expansion of the American West during the 19th century by providing banking and express services to pioneers, miners, and businesses. Wells Fargo grew through a series of acquisitions, including the merger with Norwest Corporation in 1998, which led to the creation of the modern-day Wells Fargo. However, the bank faced a major scandal in 2016 when it was revealed that unauthorized accounts were opened for customers, leading to significant reputational damage and regulatory penalties. Since then, Wells Fargo has implemented various reforms and focused on rebuilding trust. It offers a wide range of financial services, including consumer banking, mortgage lending, commercial banking, and wealth management. Citigroup Incorporated, commonly known as Citi, has a complex financial history that dates back to the early 19th century. It traces its roots to the Citi Bank of New York, which was established in 1812. Over the years, Citigroup has undergone several transformations and mergers. Notably, in 1998, Citicorp merged with the financial conglomerate Travelers Group, forming Citigroup. The bank faced significant challenges during the 2008 financial crisis, as its exposure to subprime mortgages and complex financial instruments resulted in substantial losses. It received government assistance and underwent restructuring. Today, Citigroup operates as a global banking institution with a broad range of financial services, including consumer banking, corporate banking, investment banking, and wealth management. It operates in numerous countries and is recognized as one of the largest banks in the world. Goldman Sachs Group Incorporated, commonly known as Goldman Sachs, has a prestigious financial history that dates back to its founding in 1869. The bank was established by Marcus Goldman, a German immigrant, and quickly gained a reputation for providing innovative financial solutions. Initially focused on commercial paper, Goldman Sachs expanded its operations into investment banking, securities trading, and asset management over the years. The firm played a prominent role in the development of the American economy and financial markets, participating in significant transactions and advising governments, corporations, and high-net-worth individuals. Goldman Sachs went public in 1999 and became one of the leading investment banks globally. However, during the 2008 financial crisis, the bank faced challenges due to its involvement in mortgage-backed securities and faced criticism for its role in the crisis. Since then, Goldman Sachs has undergone regulatory changes and shifted its focus towards risk management and strengthening its balance sheet. Today, it is known for its expertise in investment banking, securities trading, and asset management, serving a wide range of clients worldwide.